Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide. Here is Nathan Weaver.
Greetings and welcome to Kingdom's Wealth and Wisdom. I'm Nathan Weaver, founder and executive director of Petra Worldwide. In the world of tax planning, we often use the word write-off as a catch-all for everything that lowers your tax bill. But in the halls of the IRS, there are two distinct weapons you can use to reduce your tax liability: the tax deduction and the tax credit. Choosing the wrong one is like bringing a shield to a sword fight. One reduces the income that the IRS can see, while the other literally takes the bill and tears it up. Today, we unmask the math behind the tools that you can use and how the One Big Beautiful Bill has just made one of these significantly more important and powerful for your family. The first tool we're going to discuss is the tax deduction. Think of the tax deduction as, a veil. Let's call it a veil that wraps around your income. If you earn $100,000 in revenue and you have a $10,000 deduction, the IRS only sees $90,000 of net income to tax you upon. The math says the value of the deduction entirely depends on your tax bracket. It's not a dollar for dollar. In this example, if you are in a 24% tax bracket and you have a $10,000 tax deduction, you have reduced your tax bill by $2,400. Under the current tax law, there are some new rules and deductions in place that are certainly helping. One is the Senior Shield. It's an additional $6,000 deduction for those 65 and older. There's also the Made in USA auto deduction, up to $10,000 in interest on loans for American-made vehicles. The tips and overtime veil, up to $25,000 on tips and $12,500 in overtime. Now it's above the line, tax free, and you can even use those if you don't itemize. These are great weapons to have in your arsenal.
Pastors and financial leaders, do you need expert accounting or tax help? Do you have payroll or 1099 questions? Do you need a ministry expert to help you acquire real estate for your next project? If the answer is yes, yes, and yes, visit petraworldwide.org. Petra Worldwide has been strengthening ministries to transform humanity since 2007. Visit petraworldwide.org or call 855-481-9095.
Okay, so now we get to talk about tax credits. And I get excited about these because these are the credits that can actually take your tax bill and make it vanish away. So a tax credit, a credit is a dollar for dollar reduction of the amount of tax that you owe. If your tax bill is $5,000 and you have a $2,000 credit, now your tax bill has been reduced to $3,000. Unlike deductions, a credit's value is the same whether you make $50,000 or $500,000. The credit is not based on your individual tax bracket. Now, certainly there are phase outs in credits. In tax credits, based on your income, as your income goes up, the credit may phase out or phase down, but it is not the same as a deduction based on your tax bracket. Think of that tax credit as a direct gift certificate from the IRS, if you will. An example is the child tax credit. It's been boosted to $2,200 per child. A compensating deduction to get that same value in credit would be over $7,000. And that's the significant difference between a deduction and a credit. One's a dollar for dollar, one's a reduction of income, which a rate still must be applied to get the true value. I'm Nathan Weaver. Lead with confidence, live with integrity, and build something that lasts. We'll see you on the next episode of Kingdom's Wealth and Wisdom.
Listen every day at 4 p.m. for Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide, strengthening ministries to transform humanity. On the web at petraworldwide.org.